Nasdaq down 0.5% on the benchmark indices, but the Nifty is defending 18,100. It's coming to a curtains down on 2022, the year that the Lal Street outperformed. The year when Omicron, Russia-Ukraine war, global inflation and the subsequent many Fed rate hikes, along with massive FII selling, did not dent the sentiment on the street. Mangalam Malu has now moved over to the wall to round up the year that was on the Lal Street.
It's the last trading session of 2022. Let's rewind 2022 as we look forward to 2023 and look at what an eventful year it was for the markets. It's easy for us to forget the amount of events that we actually had to overcome during the last year. They say bull markets actually climb walls of worry. For us, it was fortresses of worry in this year itself. Remember, at the start of this year itself, there was this big Omicron wave of COVID that plagued the nation. And just as we were recovering from that, the Russia-Ukraine war dawned upon the world, as a result of which there was a lot of uncertainty and massive global inflation. Guess what the global inflation and the COVID-led printing money led to the central bankers in the world do? They printed a lot of money, so they had to unwind all of that, and that led to a lot of rate hikes by the Fed, the highest in the history in 1 year. And then we had the European energy crisis plague somewhere around the onset of the winter. And all of this was plagued by massive FII selling, the highest that we've seen in the calendar year for our markets itself. Amidst all of this, our markets stood tall and stood resilient because of strong domestic demand, PLI schemes and China plus one factor playing for all the corporates in India, and resilient domestic flows matching FII selling to the dollar. So in light of that, we continued our streak of gains. In fact, a 7-year gaining streak. That's the highest that we've seen in the history of our Nifty trading. 5% gains for both the Nifty as well as the sensex. The last 7 years, we've compounded at over 12%. How did we fare against the world? We were standing tall out there as well. The Indian markets did a 5% gain as against the Brazilian markets just under 5%. And we far outperformed developed markets, the likes of Dow Jones, Hang Seng, as well as Nasdaq, all of them. Nasdaq was down 33% in 2022. But we also saw weakening in the currency because of the Fed rate hikes, etc. The USD versus INR pair, the rupee depreciated by about 11%. So compare it in dollar terms, we actually had a negative return of 5.5%. There was massive FII selling, right? 2.75 lakh crores. That's the amount that FII sold in 2022 in our cash markets. The domestic institutional investors, the resilient ones, bought 2.73 lakh crores. If you just take a look at the way the FII sold, this is the highest that we've seen in a calendar year in the history of our markets. So in light of that, how did the other indices fare? The Nifty Bank was a strong outperformer, 21.5% higher. It was a weak year for the broader market, so the mid-cap index just managed to close in the green, but the Nifty small cap was down by 14%. Let's drill it down to individual sectors. It was the year of PSU banks, 70% higher on that index. The metals grew about 22% at an index level, but it was a fair amount of weakness for the pharmaceutical pack and the IT pack, one of the weakest years that we've seen for the IT pack in the last many. Individual stocks, the latest entrant onto the Nifty was its top performer as well. Adani Ent did 125% in terms of gains. ITC got the top honors board as well. A lot of jokes notwithstanding, this year was the year of ITC with a 54% gain out there. Coal India up around 52% as well. A lot of the old power companies came back. NTPC up 34%. In terms of other underperformers this year, however, the IT pack, like I said, stood out. Wipro leading the way down. 45% cuts out there. Tech Mahindra down 43% as well. Divi's Labs did not do too well either. And HCL Tech Infosys down 19 to 21 odd percent. This year was the year of PSU banks. Like I said, 144% gain for UCO Bank. Canara Bank was up around 60 odd percent as well. SBI 33%. In terms of other sectors that did well, it was the defense stocks. Mazagon Dock almost 200% higher on that one. If you invested your money at the start of the year in Garden Reach, you would have doubled it. BEL itself would have given you around 43% in terms of returns. But that's not all. We had some other mid-cap gainers as well. Indian Hotels 75% higher. TVS Motors zoomed ahead 73%. Cummins and Federal Bank up anywhere between 40 to 66% too. In terms of losers though, we had the mid-cap IT names, Mphasis, FirstSource, Birlasoft. All of them would have halved your money. So would IEX, in fact, from the start of this year, down 44%. We were coming off a COVID year, so we saw some declines. in all these diagnostic companies as well. Metropolis, Dr. Lal, falling anywhere between 40 to 60 odd percent. And this was also the year where we saw all the new age businesses decline, and how. A big cut, anywhere between 50 to 60% on Paytm, Zomato, Nykaa, PB Fintech, Delivery, even car trade was down 45%. But let's end on a positive note. There were a lot of gainers from the broader markets. Adani Power up almost 203%, NDTV 210%. It was the year where sugar did well as well, 240% for Ugar Sugar, and FACT was up 180%. So that's the year that was 2022, an eventful one for the markets.